Alright everyone, welcome back to another episode of Bitcoin TA. If you're new to the channel, warm welcomes. Let's jump right into today's video. I've got a few things that I want to go through. Number one, we're going to be checking out how Bitcoin is performing against the US dollar. As always, we're going to talk about a few patterns that I see playing out right now. We're then going to move on into the Bitcoin dominance, talk about how this is likely to bleed over into the altcoin market and how Bitcoin is likely to outperform the altcoins. We're then going to move over to the stock market, talk about the rally that's happening in the dollar, and we're going to be finishing off things with a super nasty pattern that we are playing out right now over on the SPY stock market. If this does break down, it's going to have very negative implications over on the crypto market. So with that said, let's jump right into today's video. Now, since the last video, you may have noticed, if you're a veteran to my channel, I have added a new trend line in town, the new sheriff. We have come down specifically on the Kraken pair. I've looked at this over on Coinbase. I'm not going to, pull up a bunch of different examples and lengthen the video of this for no reason, but some of the exchanges, it doesn't perfectly line up. Over on Kraken, you can see this, bottom structure is perfectly playing out right now. And previously, we were talking about this range from the 9th of May all the way over to here. We've literally now been trending sideways for exactly a month, 31 days, 30 days, whichever one you want to say it. So we've been trending sideways for a whole month now. So, a lot of people are flipping bullish, bearish, bullish, bearish, bullish, bearish. But the fact of the matter is, we're the same price as we were, a month ago. This looks like a textbook redistribution phase to me. Obviously we are panning out like a bear flag, bearish pennant, whichever way you want to draw it from, but in my opinion this market structure is much better defined as a redistribution range. You can see we've moved back down to the bottom of the range, redistribute to new holders, redistribution, back down, up, down, up. I mean, it's textbook. It's absolutely textbook redistribution. And also, another line that we can add in town is another pattern that we now have playing out, because we've come down to this. We've now got 3 touch points. You can also argue that we are in an ascending triangle, which should have an apex of the 21st of June. Now, first of all, I do not think that we're going to go sideways until the 21st of June. If you're, once again, a veteran to my channel, you'll know why I've been talking about how I think that if we're going to have a bounce, which I still do think is likely, we're going to do it before the 15th on the FOMC meeting. Why do I think that? Because the FOMC meeting is basically confirmed. I've even heard that they're planning on increasing the interest rates up to as high as 70 basis points. On the 4th of May, they previously increased it by 50 basis points, and subsequently the next day, we absolutely capitulated. We capitulated 36% within basically a week or so, which is definitely not good. So I do think if the Fed increases it by 50 basis points, not going to look good. They're obviously raising the interest rates, making it harder to borrow money. Less of that money is going to find its way into the crypto and the stock markets, which obviously has bearish implications for Bitcoin and the crypto markets. I also believe if we do have this increase in the interest rates, then the stock market is going to be the first to get hit by this. The stock market is already hanging on by a thread, which we're going to talk about in just a moment. But I really wish I could say at this moment in time, for Bitcoin, we're 100% going to break bullish or we're 100% going to break bearish. The matter of the fact is we are the same price as we were 31 days ago. We're just trending sideways. So I don't think there's any reason to jump the gun at this moment in time. But if anything, I'm noticing more bearish patterns on the chart than bullish. So for example, we've got a high, lower high, lower high. We've also got something very reminiscent of an M pattern. If we do break below 29,500, in my opinion, we'd be coming all the way down to 28,600. I don't necessarily find it more likely that we're going to break down. Bear in mind, while I'm saying this, I am not trading these markets at this moment in time. I have mentioned in the previous videos there would be a trade that I'd be looking to make, and that is if we manage to flip above the top of this range at 31,300. I believe I mentioned 31,700 as the area that I'd need to see flip. So, I'm not talking about coming up, breaking above it, and then, I'd be entering along here. I'm talking about coming up, breaking above 31,700, maybe topping out at 32, heading back down 31.7, getting that confirmed touch, and then I'd really want to see us break above this previous high. Once that happens, I'd definitely be looking to enter another trade. But as you can see with these 3 arrows pointing down on the chart, we've got, you know, 1 failed breakout, 2 failed breakouts, 3 failed breakouts. So at this moment in time, I really wouldn't get too excited until we make a decision. Now, on the squeeze bomb, on the daily time frame, we are starting to run out of momentum. That is obviously very, very picturesque of what we are seeing over in the chart right now. I mean, it's obviously very well explainable. We've come up to the EMA ribbon's got multiple rejections, multiple lower highs, and we are moving down / sideways, so bulls are losing control of the market structure. Over on Kraken, today we've had about 2.6 thousand Bitcoin sold. Nothing crazy over on Bitstamp, Coinbase either. So not a crazy amount of volume coming into the markets today. However, we are moving down about 2.76%. So once again, if you were looking for a trade, which, you know, I am still looking for this trade, I would really need to get above this red resistance line. Until we get above there, I wouldn't be looking at a trade. Lower time frames, you can also see we could potentially have a W pattern playing out. On the second leg of the W, it seems like we're currently getting contested with the 13 EMA, so this is definitely a level we need to break. 30,300. Until we get above there, you know, maybe we could see a move back up to 30,100. If we do, we might have a nice breakout of this W pattern, but I'm not interested in these very, very small moves on the W patterns. I'm much more interested in the move for Bitcoin, which I've been talking about potentially playing out all the way up to 34,000. That is my first price target in the macro time frame. Also, if we head over to the monthly time frame, flatten this out, we do have some resistance coming in at 35,000. This is really where I plan on kind of de-risking some of my trades, or not trades, really spot positions. I've said in quite a few of my videos on Bitcoin recently that I picked up a ton of Bitcoin, and yes, a lot of that is in cold storage, but some of it I would not mind selling if we do move up to 35,000. Bear in mind, the Bitcoin that I have in my cold storage wallet is not going to see the light of day until I've got gray hairs, but you know, that being said, I would be very happy to de-risk myself if we do come up to 35,000. That is my trading plan right now. So like I said, lower time frames, I would definitely need to see 31,700 get flipped, and I can't emphasize this enough, because you know, a lot of people may think flipped just means that, you know, you push back above 31,700 and you enter as soon as we break above. That is not what I want to see. You need to keep your eyes on this. You cannot have like a position to enter a trade, because, you know, only your human eye can eyeball, you know, us breaking back above this, coming back down, back testing it, and then moving back up. If you simply set a trade for the breakout of 31,700 and we come up to, you know, 31.8 and then just break back down, it's going to be another failed move, and that's really not what I'm looking to do right now. 4-hourly time frame as well, momentum indicator is starting to push down, but we do have a W pattern. So like I said, the majority of the price action right now is literally sideways, so I wouldn't be too bullish or too bearish. I'm simply waiting for the markets to tell us what direction we're going to break. On the daily, a move below about 39,300 or so, 29,300 rather, would probably send us to a capitulation back down to 25 and lower. I'm really not expecting that to happen, but like I said, I'm not trading these markets right now, so be very, very cautious. That is basically the Bitcoin price. Bitcoin dominance, I really only want to spend a minute on this because I made a in-depth video about this yesterday. If you do want my full in-depth, you know, thoughts, giving a proper breakdown of the Bitcoin dominance, go check that out. I made a video on it yesterday. But Bitcoin dominance, Fibonacci candles, we haven't even, you know, taken a break. If we switch over to Japanese candlesticks, we have had a throwback. On the daily time frame, it looks like we're holding it. 4-hourly time frame, you can see we've slightly capitulated into it, depending on how you're drawing it, actually. Yeah, I mean, I would draw it like this on the 4 hours. So we are technically back into the channel. Let's see how this pans out. I think we really do need to keep an eye on this in the macro time frame though, because we've literally been going up on the Fibonacci's for, let's see here, for the past 30 days, we've had 3 red candles, and they've all been doji candles. So 90% of the time, we are moving up on the Bitcoin dominance. That is something to note. I'm going to finish the Bitcoin dominance segment here. The only other thing I want to say, which is something that I shared over on Twitter, is that if we do see the Bitcoin dominance break above 48%, specifically the actual target of this is 47.69. However, I think 48 is a nice round number. If we do see this breakout of this this channel though, then we are probably going to get sent to the moon on the Bitcoin dominance, and that is going to mean that altcoins are going to get slaughtered. Like I said, if you want to know more about the Bitcoin dominance, check out my video from yesterday, but this is still looking very, very nice. We've had a breakout of the most important descending channel on this, and we're also playing out a beautiful, beautiful W pattern. So I would not be bullish on altcoins right now. It's very, very clear. Bitcoin dominance moves up, Bitcoin outperforms altcoins. Until this starts to move down, it is not the time to buy altcoins. Let's head over to the dollar. On the daily time frame, we have started to move up. Obviously, the dollar is inversely correlated to Bitcoin. So seeing this start to move to the upside, looking at the squeeze mom starting, the bears are starting to lose momentum, meaning the bulls are starting to step back into the US dollar. This is not a good sign for Bitcoin. This is not a good sign for the crypto markets. This is not a good sign for the stock market. And this is also, you know, looking very, very bearish on the stock market. We're going to talk about that in a sec. I really only wanted to mention that we are once again moving back up in terms of the US dollar index. A lot of people got super, super bearish on the dollar. A lot of people said, you know, the bull run's coming, the dollar's out. But I was telling you, you know, while we were coming down here, do not count the dollar out until we have this mass capitulation, because I mentioned before, looking back on the markets in March 2020, we literally capitulated about 5.28%. Like I said before, we had about an almost 9% move. So, you know, bear in mind, I believe the last time we measured this, we only came down, you know, 3.5% or so. Not even, yeah, 3.5%. So the dollar, I would definitely not count it out right now. Sure, we are in a bear flag, but this can change, and if the dollar keeps on moving up, it's really not going to be good for crypto, which at this moment in time is one of the major reasons why I'm really not focusing too much on altcoins and focusing on bullish Bitcoin trades. You know, I wouldn't be opposed to making the breakout trade above 31,700, but apart from that, I would very much be sitting on the sidelines, as like I said, we are the same price as we were 31 days ago. So let's head over to the SPY before we wrap up the video. And as you can see, just like the dollar and just like a lot of the markets that we're seeing right now, we are in a huge, huge bear flag. I know I've got this drawn as like the pole as like a huge, huge channel. If you don't like it like that, you can simply draw it like this, and then you can see this is the big bear flag that we are currently sitting in for the SPY right now. I'm going to keep it how it was with the channel. I prefer it to look like this, but at this moment in time, we also have another super bearish pattern for the SPY playing out. I also do apologize. I don't know why TradingView on some of the stock markets and the stock indexes is really fadey, and I even changed the color scheme to black. I even checked out the SPY on the lower time frames over on my Brave browser, but for some reason, let me know if you have this as well, but there's all these weird lines on the chart, so it is what it is. We've got to work with it. But we are also setting up a diamond top formation. Now, this is normally the sign of a reversal. You can also have diamond bottoms, which are once again a signal of reversal. It looks like we actually had, if I remove this, looks like we had a diamond bottom structure down here. Let's draw this out. This one, not as nice as the one that we're seeing right now in the markets, but nonetheless still completely valid. We did have a reversal from that, so I do also expect this to be a potential reversal signal. The apex of this is going to be coming into the 10th of June, so, you know, if we do break down from this, unfortunately, Bitcoin may not have the strength to move back up to 34, 35, 36,000, which would completely suck. But like I said, we really need to wait for Bitcoin to make a decision. There's no point in flipping, you know, bearish, bullish, bearish, bullish, bearish, bullish, bearish, which I'm seeing a lot of people do day in, day out for the crypto markets. We've been at the same price for 31 days. Yes, we are chopping within a redistribution range, but we really do need to wait for the next move to happen. So keep your eyes on 31,700 for Bitcoin. If we do break above there, have a successful backtest, and very importantly, I want to see a daily close with a daily candle backtest. So, you know, if we break above it, backtest it on the 4 hour and start to move up, that's not enough for me. We've seen this before where we've done this. I really need to see a little bit more than a single daily close and a backtest. I need to see, you know, at least one daily cut. I'll be updating you when it happens on what I think is going on in the markets. Don't worry, I won't leave you in the dust on the trade. I will let you know as soon as I do plan on making that, but at this moment in time, really need to sit on the sidelines. 31,700, that is the price to be bullish in the short term. 29,300, that is the price to flip bearish in the short term. In the macro term, my opinions are unchanged. If you, like I said, if you are a veteran to my channel, you already know my price target. If you're new, once again, hope you enjoy your stay on the channel. I hope you do find some value in these videos. But like I've been saying, I do think we're heading down to the 200 week, and I previously said this is going to be coming in at about 22,000. I have also been saying, bear in mind, this is a weekly moving average. The price of this is going to be moving to the upside every single week, because in the name it is the 200 week moving average. And if we extrapolate from 200 weeks ago, you can see every week we are replacing price targets from, you know, $6,300, and we're replacing them with price targets around $30,000. So this 200 week moving average is going to be exponentially increasing, and at this moment in time it seems more likely that we're going to be bottoming at around about 23,000 rather than the initial 22,000. I know it's really not a big caveat, really not a big change, and you know, in that respect, you know, we haven't even come down here. So keep an eye on that though. 23,000, I do think it's very, very likely that we are heading back to here one last time before we break bullish. I don't want to jump into, you know, a million and one reasons why, but if we zoom back, 2015 bear market, candle body closes on the 200 week was the bottom. 2018 bear market, candle body and candle wick closes, if we remove this so you can see it, was once again on the 200 week moving average. In the 2020 pandemic scare, the candle body closes, not the candle wicks, but the candle body closes perfectly bottomed on the 200 week. Obviously, trend is your friend until the end. We should expect for us to always come back to the 200 week until we don't. That's the whole point of the trend is your friend until the end. We're not assuming that this is going to play out forever. We're simply saying, while this is playing out, it's probably better to bet on, you know, a multi-year trend rather than to not bet on that trend. So I hate to say it, but it is looking less and less likely with every day, every week that goes past, that we are actually going to move up to 34 and 38,000 like I originally said. That being said as well, the FOMC meeting is literally 7 days away. So if we are going to move for Bitcoin, we really need to start moving now. If we start to break down in the next couple of days or so, then it's going to be very hard for Bitcoin to get up to that 34, 36, 38,000 like I originally said. So bear in mind, because of this, I am not in a trade right now. I'm sitting on the sidelines. You know my price targets. Wait for the break of 31,700 before you become micro bullish, and wait for the break down below 29,300 before you flip micro bearish. This is just my trading plan. You should always do your own due diligence, do your own research, but this is what I think is going to be happening. So I'm sitting on the sidelines at this moment in time. Yes, I still am accumulating cheap Bitcoin every now and then, but I do think we're moving down to 23. So be very cautious. That is pretty much all I've got for you. We talked about the USD price, we talked about Bitcoin dominance while the Bitcoin dominance is heading up. Once again, do not expect altcoins to outperform Bitcoin. We talked about the dollar showing extreme strength right now, holding the 4-hourly EMA ribbons and moving back above the 13 EMA, moving up in the bear flag. The SPY breaking down to the bottom of this bear flag. You can see we've already capitulated below. We did this the other day and we started to move back up, so keep a keen eye on this. Within the next 2 days we should have a decision whether the stock market is going to break bullish or bearish. This is going to have a massive implication on Bitcoin, so within the next 48 hours I think a big move is coming. That's all I've got for you today. As always, not financial advice. Cowboy out. Peace.